Hi everyone and welcome to Game of Trades. Today we're going to be looking at the company Walt Disney. It's probably been on your mind cancelling your trips to Disneyland as the resorts close, or maybe you're trying out the new Disney Plus streaming service as the company takes the battle to Netflix and Apple Plus. Whatever the reason, technically there's some very interesting levels that you need to know about. So let's dive right in. Right now we're looking at the daily chart of Walt Disney. I'm just going to jump to a monthly chart just so we can see that bigger picture. And what you'll start to see is that there are some key levels of support and resistance that we can plot on the chart. Here we've got a key level of horizontal support where buyers have historically stepped in all the way back from February 2015. Sellers have struggled to break through this level and buyers have managed to step into the market. So we have come into this level and we've done the same thing as well. Sellers try to push lower on this monthly candle and buyers have pushed it back up. So there's a real battle going on here and we need to look at the detail on the lower time frames to find out which way we want to be trading. Before we do that, take a look at the resistance line that has formed as well on this monthly chart, and you'll notice that for quite some time Disney was trading inside of a very long-term consolidation. Bear in mind this is a monthly chart, and the market did now break back below inside of this consolidation but has been held by support at the 90.32 level. Now let's have a look at a weekly chart. So as we scroll down we can actually see now there's some key levels of support to take into consideration. So we can see the key level of support that we've just plotted there on the monthly chart. We can see the market not only came down to this level and broke below it, but it did actually go to the next level of support, which was this significant low here back in 2014, October 2014. And the reason we're plotting these levels now, because it's going to be quite interesting. There's a very high probability chance that we could see another retest off the market pushing down towards these lows. So we need to be prepared for both situations. Now, in this instance, I personally have been building long positions all the way from down here, or from a long-term investment standpoint, but I'm also considering looking at short positions from a short-term perspective, which we're going to get into in a moment. But if we're looking at this weekly chart, there's a couple of variables that could really play out where we are at this point in time. We can actually see that even though the market did bounce off this level, the next path it could take could be quite varied. We could either see the market drop all the way back down and retest some of these lows here, or we may well see the market push up either here or somewhere here and actually continue pushing higher if the overall stock market benefits from some further upside. Now, if Disney's stock price does indeed find some further downside here, we've got to be mindful of a few additional levels that have popped up on this weekly chart. So you can see here we've got these significant lows from 2017. So the market could easily come down to any one of these support levels, either break through or bounce off. Now, in the long term, if Disney can recover, if investors decide to pile back into this stock, if the numbers that are coming out at the next earnings season, where on the daily chart we can see it's around the 5th of May, or on the 5th of May, if the numbers start looking bullish from their Disney Plus service, investors could get quite excited because there's a real battle going on in the streaming wars, in the online streaming world. Dubbed the streaming wars, it's Netflix, Apple Plus, Disney Plus and other providers battling for dominance within that online streaming space. And investors are particularly keen to see if Disney can actually take the fight to market leader Netflix. So looking at this daily chart in more detail, it does provide useful information. We can actually start to see a few more different resistance lines that are forming, as we can see here. We can actually see we've got these significant lows developing at this point, and the market has rejected that area already. So now we've got a big battle going on. We've got buyers that have stepped into the market here and have pushed the market higher, And now we've got a battle going on between the buyers and sellers. Okay, some investors are going to be bullish, waiting for the market to break beyond this level and pushing back to the top of this consolidation. And who knows, maybe breaking outside of this and continuing its long-term uptrend. Other people may well be looking for additional failures on the market pushing lower at this current point in time. Either way, it's going to be quite interesting. Now, if we do indeed see some downside, we've got to be careful of these levels that we've plotted from the weekly and monthly chart. Any one of these levels could become a support level or could become a level where the buyers are happy to step into the market. So the key with this is to be able to look at the price action on lower time frames to really see the battle between buyers and sellers. We can actually see this battle in a little bit more detail by looking at this 4-hour chart. And something you'll notice is that you can see the very clean levels of resistance kicking in here. Buyers have really been struggling to break beyond this level. However, sellers haven't stepped in with any great magnitude just yet. For me personally, I'll be looking to build upon my long positions from here and waiting for the market to break beyond this level of resistance. And this level of resistance that we've identified, it's actually quite significant, because if we zoom out of this chart, we can actually see that it was significant support not only here in February 2019, but it goes back all the way to 2018 as well. So if buyers can manage to break beyond that level, then I'll be looking to add into my long positions up until this level of resistance here. And of course, if we break beyond this level, looking to add in further. Now, to the downside, it's a little bit trickier to the downside because we haven't got the clean cycle formations and there's a lot of support levels kicking in very close together. If the market does roll over to the downside, then there's some really great potential opportunities on the SP 500 where the reward levels are a little bit further away. So you've got more room to breathe if the market goes down. Here, there's not that much room to breathe. The market could find support here and push up. It could come down and find support here and push up. So because all these levels are very close together, I'm leaning more towards the long side. So what is the key? What would I want to be seeing around these levels to support a potential push back up to the top of this resistance line? Well, we need to be led by price, and this is where your price action patterns start to become useful. So if we zoom into this chart here in a bit more detail, we can either wait for the market to come all the way back down to this support level and look for similar price action patterns. So let's say here, for example, we had a bullish engulfing bar. This is where one bar or one candle totally engulfs the range from high to low of the previous candle, and that signifies a significant shift because sellers tried to push the market down, but they did not manage to push the market lower, and buyers stepped into the market and pushed it all the way back up, and it closed above the high of that previous bar or candle. So that is a significant shift in sentiment from sellers to buyers, and we'll typically see a little bit more upside from that point. So we'll be looking for something similar around this level here. Okay, now if the market comes down to some of these support levels that we've plotted from the weekly chart, then what we want to be seeing is possibly a change in cycle formations. So just like the market came down to this level here and it started to consolidate, we would want to see the market break to a new high in the cycles that it forms. So I'll be looking for these similar patterns to develop either here or here. Now, of course, there's a potential chance the market could come all the way down to here and completely crash from this level. And who knows, maybe we could see some even further downside if the market does indeed crash below the support level and keep on going lower. And if it does that, we'll be prepared for that and we'll have an update on that. Make sure you subscribe to the channel so you can stay up to date with all the latest technical analysis on the different markets that we're going to be looking at. So just subscribe to the channel and you'll be updated to all the latest videos, which in this current market condition is so important, right? Because there's so much volatility out there. There's a lot of things happening right now in the current marketplace. Now that we've set the scene on potential areas where we'll consider taking long positions if this market does indeed come lower, the next thing is to think about your trade sizing and the way you're going to be entering into different trades. Now, of course, in this current market condition, one of the best strategies that I'm using right now is to go in at lower risk first of all, and if the trend does start to develop, start adding in to the trade and start building upon the risk. So in this instance, if the market does come lower, I wouldn't necessarily be looking to short Disney. I'll be looking at the SP 500, some other potentially interesting stocks to short, which provide better risk reward levels, because there's just too many support levels here where the market could find some support and actually push up. So what I'll be doing is analyzing price around these levels and looking for clues that buyers are going to step in. However, I wouldn't be trading full risk, and I'll be trading low risk positions here. And if it works out and then gets back above that resistance level that we've already earmarked, then I'll be adding in more risk and build upon that as this move potentially develops to the upside. If we have a losing trade here, then fine, so be it. It's a small risk trade. Then I'll go again here, and I'll look to do the same thing if the market can build upon here, and I'll be waiting for the market to break above this resistance line, building up to here, waiting for the market to break above this resistance line, and building up to here. In each case, I'll be looking to build slowly as the move develops. And for me personally, I like to use price action patterns like we talked about with this bullish engulfing bar, because they just provide really useful information, not only in terms of who's in control of the market, but simple levels where I can enter and put a stop loss. So for example, in these price action patterns, I can have a possible entry price on the high of the bar or the candle, and I can have a stop loss at the low. And I can just sit back and see how the move develops. And if we start to see the move developing, then go again and start to add in positions as it pushes up. So that's really what I'll be looking for. So there's some really interesting levels developing here on Disney. And of course, with any asset class, there's multiple ways to trade it. The key thing is to have a plan, right? Have a plan. So when the market does something, you know what steps you're looking to take action on. And that's the key, right? Preparation is the name of the game. Now, I really hope you enjoyed this video. I would love to hear your feedback regarding the contents of this video. So please do put your feedback in the comment section below here in this YouTube channel. And don't forget to subscribe to all the newest, latest content that we're going to be producing over the next few weeks and beyond. In the meantime, I'm going to wish you all the best of your trading. Thank you so much for listening to this. I really hope you found it to be of value, and we all wish you the best in your trading.